Hey guys, it's Andrew Bolton here with the Bolton and Clemens Real Estate Group. You know, Trev just came out with their new stats for February. I just wanted to go over those with you. There's some interesting signs coming. Something we've been saying for months, well, maybe a month. But let's see what's going on here. I hope you like this video. If you have any questions or you want to go further into some of these stats, let me know. We're going to go over the Toronto area, 4016 as well as 905. We'll dive a little bit deeper in, but if you want an area stat, or actually if you want something particular to your property, we'd definitely be happy to do that for you. So just let me know. What are we going to see? Well, we're going to see that buyers are back. They took a little hiatus, I guess, from about October through into January, but they're definitely back. You know, we've been in bidding wars this week, actually on all of our properties, both buying and selling. To some, losing sometimes and winning, depending on where we're at. So it's challenging, and it's definitely changing from what it was even just a short few months ago. The average price is up 1.1% in all of Toronto. We're going to dive a little bit further into that, and why don't we do that right now? Treb sales activity in February 2024, we had 5,607 sales. Last year we had 4,754, so we are up, and the average sales price is slightly up over that time frame as well. Let's look into sales a little bit further by area as well as major home type. So let's look at detached first. We've got in the 416, there's been 568 sales. In the 905, 1927. I mean, there's a lot more activity we're feeling out in the 905. We're finding that Toronto proper is a little bit slower to wake up, but it is coming. We've got an average price point of just over 165 for Toronto and 138 for 905. That's on detached. So semis, same kind of thing, more sales in the 905. But we've got an average in the 416 of 1,320 essentially, and in the 905 just under $1 million. So townhouses, were 970 and 925 respectively, and condos, which we are seeing to be coming back a little bit. They are slow to pick up. There was a really big amount of inventory at one point, so that sort of slowed that market down, and just a lot of people being scared. But we're in the 416, the average is a 726, and 905 is 639. So what does that mean year over year change? So detached in the 416, in terms of the amount of sales, is up almost 20%. In 905 is over 20% increase. The average price in Toronto for a detached is down about 3.5%. I mean, that, if you look at month over month, it is gaining strength, so we are coming back. And in the 905, we've already come back and we're at 1.7% over what we were this time last year. And if you remember this time last year, it was really quite busy. We were, having bidding wars and things were flying off the shelves, and inventory was low. So, I mean, we've kind of recovered all of that downturn that we had in the past year in 2023. Semi-detached, we've got in the 416, we've got 26.6% up in terms of the amount of sales, 11% up in the 905, and both of those are up from last year in terms of average price, so almost 3% in Toronto and over 5% in the 905. Townhouses still seeing some gains, so 18% in terms of the amount of sales in the 416 over last year, 26.5% over in 905. 416 is still underperforming in terms of price point, 3.4%, and the 905 is up just about 1%, so pretty much status quo to what it was. Condos, 7.2% up in the 416 over last year. In 905, it's up 13, almost 14%. And in terms of pricing, we're still operating under what last year was in February. So those, you can still get some great deals out there in condos. So just under 0.5% in 416 and about 3.5% in the 905. Let's dive in a little bit deeper. This is hard to see, I know, for you guys, but I'm just going to read it. Some of the highlights and some of the things we look at here. One of the biggest things we look at is the months of inventory trend. I mean, this tells us if it's a buyer or seller's market. And traditionally, it's 3 months is sort of the tipping point. Anything over 3 months, between 3 and 6 is balanced. And then over that is a buyer's market. Now, we've been in a seller's market for so long. So when we get to about 3 or 4 months of inventory, in Toronto, at least, it does feel like we're in a buyer's market and everybody starts to act like that. But right now, as you can see across the board, I mean, depending on the area, but we're all under 3 months for most of it. I mean, we've got, let's see, in the city of Toronto, 2.7 months of inventory. We've got 1.8 in Aurora. We've got 5.2 in King. They're always a bit lagging, actually. Markham is 1.8. So we're sitting around 2 months on average, let's say 2.5 months of inventory, which is a seller's market. I know that a lot of the news is saying that it's not, and it's the market is crashing, things like this. We're not seeing that. May that come? I don't know. I honestly, one thing COVID taught us is that we can't make those kinds of calls anymore. But right now it feels quite busy. It does feel like we need more inventory. So if you're sitting on a house and you're wondering when the time to sell is, well, the best time to sell is when inventory is low and when it makes sense for you. So those two things. But right now, it does feel like inventory is quite low. What we are seeing, though, if your house is pretty, if it's set to go, if it's turnkey, things are selling really fast. If it needs some work, if it's a little dated, you got to price it right to get it sold. We are seeing buyers be a little more fickle when it comes to that, but I think that might change as we go through the next month and inventory and bidding wars continue and choice goes down for those buyers. So I think we're going to see a really strong spring. Where we're going to go after that, honestly, I can't tell you. But if they start to play with the interest rates, we're definitely going to see an uptick in consumer confidence. So, we got to hang on. It's going to be an interesting ride. If someone tells you they know what's going on in the market, in another 3 months or 4 months, I honestly don't know how they would know. I don't even think the Bank of Canada knows what it's going to do. But we are seeing some of those underlying metrics that we watch are stronger. So they may not be so quick to lower those interest rates that we're all waiting for. I know I am. I'm on a variable. So if you're in the same position, we're praying for a little bit of a interest rate reduction, obviously. That's what we're seeing right now. Basically, to sum it all up, we're seeing the market heat up. Okay. We are going to see some more inventory hit the market. Seasonally, we do see that after March break, and that'll be welcome. I would like to see a more balanced market, to be honest. It helps us do our jobs. It helps us protect our clients, both buyers and sellers. And it's just an easier and more professional way to do business. But, I can't control that. So if you have any questions about your particular area, if you have any comments, please do leave them in the comment box and contact me or my team if you would like to have an evaluation of your home done and see how you're sitting against the rest of the market. All right, great. Have a great day.